Imagine this. You wake up tomorrow, and the US dollar is completely worthless. Not because of a market crash or inflation, but because someone across the ocean just decided to flood America with fake dollars, millions of them. And suddenly, everything you've saved, every paycheck you've earned, it's all gone.
Sounds impossible, right? Well, that's exactly what happened to half of Europe with a currency system so powerful it literally controlled entire nations for centuries. And the craziest part? The lessons from this forgotten history could save your finances right now.
Hey everyone, welcome back to the channel. Today, we're diving into one of the most mind-blowing stories in financial history, a currency system that wasn't the dollar, wasn't gold, and wasn't even paper money. It was metal bars and seashells that somehow enslaved economies, built empires, and destroyed others. Here's why this matters to you as an American in 2026. The same manipulation tactics used centuries ago, they're happening right now with our modern currency, inflation, and even cryptocurrency. Whether you're grinding through your 9-to-5, trying to pay off student loans, or wondering why your savings account feels worthless against inflation, understanding this history will completely change how you think about money.
By the end of this video, you'll know exactly how currency can be weaponized, why the dollar's power is both a blessing and a risk, and most importantly, 3 specific actions you can take this week to protect your wealth. Let's break this down. The currency nobody taught you about. So here's the story most Americans never learned in school. Between the 15th and 19th centuries, there was a currency system in West Africa and parts of Europe that was more stable than most paper money today. It consisted of 2 main forms: manillas, horseshoe-shaped metal bars made of brass or copper, and cowrie shells.
Now this is where it gets interesting. These weren't primitive currencies. They were sophisticated monetary systems with exchange rates, inflation protection, and even international trade value. A cowrie shell from the Maldives could buy goods in Africa, be traded to European merchants, and end up funding expeditions to the New World. Here's the crazy part. European colonizers quickly realized they could manipulate this entire system. Here's how they did it. Step 1. Study the system. British, Portuguese, and Dutch traders spent decades learning exactly how much a cowrie shell was worth, what exchange rates existed between shells and manillas, and how local economies valued these currencies. Think of it like modern hedge funds studying the Federal Reserve before making billion-dollar bets. Step 2. Mass production. Once they understood the system, European countries started mass-producing fake versions. They'd manufacture millions of manillas in European factories, way cheaper than the traditional brass versions, and ship them to Africa. It's like if China started printing perfect counterfeit US dollars by the trillion. Step 3. Currency flooding. They flooded African markets with these currencies, causing massive inflation. Prices skyrocketed. What used to cost 10 cowrie shells now cost 1,000. Entire savings were wiped out overnight. Sound familiar? It should, because the Federal Reserve does a softer version of this every time they print more dollars. Step 4. Economic control. With the local currency destroyed, European traders could now dictate terms. They'd offer stable European goods in exchange for labor, resources, and eventually, people. This currency manipulation was one of the key economic drivers of the transatlantic slave trade. Let that sink in. The numbers were staggering. By the 1800s, Europeans were importing 10-20 million cowrie shells annually into West Africa. A single ship could carry enough manillas to inflate an entire regional economy. The exchange rate of cowries to British pounds collapsed from 1 to 1,000 to 1 to 50,000 in some regions. This wasn't just about money, it was about power. Control the currency, control the economy, control the economy, control the people.
Let's talk about what's happening with the US dollar right now. Since 2020, the Federal Reserve has printed more dollars than in the previous 100 years combined. We went from about $4 trillion in circulation to over $20 trillion. That's a 400% increase in just a few years. Does this sound like the European ships flooding Africa with cowrie shells? Because it should. Here's what this means for you. Every dollar you earned in 2019 is now worth about 20% less in actual purchasing power. That raise you got? If it wasn't at least 20%, you actually got a pay cut. That's currency manipulation affecting your real wealth.
Common mistake people make. They think inflation just happens naturally. It doesn't. It's a policy choice. When the government prints money, your money loses value. It's that simple. What financially smart people do differently, they move their money out of pure cash and into assets that hold value. Real estate, stocks, commodities, even Bitcoin. They understand that holding cash during inflation is like holding ice cream in the desert.
Real-world example. Let's say you had $50,000 sitting in a savings account in 2020. That same $50,000 can now buy what $40,000 could buy back then. You didn't spend a dime, but you lost $10,000 in purchasing power. That's a 20% wealth cut without you even noticing. Action step for beginners. Open a high-yield savings account. Some are paying 4 or 5% right now through banks like Marcus or Ally. Or start a brokerage account with Fidelity or Vanguard and buy index funds. Don't let your money sit in a checking account earning 0.01%. Have you ever noticed how everything costs more, but your paycheck stays the same? That's not random. That's currency manipulation in action. Drop a comment if this is hitting home.
Point 2. The reserve currency privilege and its dark side. Here's something most Americans don't realize. The US dollar is the world's reserve currency, which means other countries have to hold dollars to trade internationally. This gives us an insane advantage, but also a massive vulnerability. The advantage? We can print money and export inflation to other countries. When the Fed prints $5 trillion, some of that inflation gets absorbed by China, Japan, Europe, and everyone else holding dollars. It's like having a credit card that someone else pays off. This is why we can have a $34 trillion debt and still function.
The dark side. This system only works as long as everyone trusts the dollar. The moment that trust breaks, whether from political instability, another currency rising, like China's digital yuan, or excessive money printing, the whole system can collapse. And we'd experience what those African economies did. Hyperinflation, worthless savings, economic chaos. Common mistake. Americans assume the dollar will always be king. History says otherwise. The British pound was the reserve currency for 200 years, until it wasn't. Spain's currency dominated for a century, until it collapsed. Every empire thinks it's permanent.
What smart people do, they diversify. They don't keep 100% of their wealth in dollar-based assets. They own international stocks, foreign real estate, precious metals, and alternative assets. Real scenario. Imagine you're 35 years old with $100,000 saved for retirement. If you keep it all in US-only investments and the dollar loses its reserve status in 20 years, that $100,000 might only have $30,000 of purchasing power. But if you diversified 30% internationally, you'd be protected.
Beginner action step. When you invest in index funds, choose ones with international exposure. Look for funds with World or International in the name. Vanguard Total World Stock ETF, VT, is a simple option that spreads your money across 8,000-plus companies globally. Does this sound familiar? Have you thought about what happens to your savings if the dollar weakens? Let me know in the comments.
Now, this is where it gets really interesting. Just like European traders used currency manipulation to create dependency,
Modern financial systems use debt to achieve the same control. Think about it. Student loans keep young Americans working for decades to pay them off. Mortgages tie you to 30-year payment plans. Credit cards charge 20.
This isn't accidental. It's systemic. The goal is to keep you working, consuming, and paying interest. You become economically dependent, just like those economies were dependent on European trade. The shocking numbers. Average American household has $137,000 in debt. Student loan debt totals $1.7 trillion nationally. Credit card debt averages $6,000 per household at 20% APR. 78% of Americans live paycheck to paycheck.
Common mistake. People think debt is normal and unavoidable. Everyone has student loans. Everyone has a car payment. Everyone carries a credit card balance. That's programming, not reality. What financially smart people do, they treat debt like poison. They pay off high-interest debt first, credit cards, personal loans. Avoid lifestyle inflation. Don't increase spending when income rises. Build emergency funds so they never need debt for surprises. Use debt strategically only for appreciating assets, real estate, businesses.
Real-life comparison. Person A makes $60,000 a year, has $30,000 in credit card debt at 22% APR, pays $550 per month in interest alone, never gets ahead. Person B makes $60,000 a year, has zero consumer debt, saves $500 per month, invests in index funds. After 20 years, has $250,000 plus built up. Same income, completely different financial futures.
Actionable strategy, 30 to 90 days. List all your debts with interest rates. Attack the highest interest rate first, avalanche method. Pay minimum on everything else, but throw every extra dollar at that highest rate. Once it's gone, roll that payment to the next highest rate. Repeat until debt-free.
Long-term impact, 1 to 5 years. Becoming debt-free isn't just about math, it's about freedom. No debt means you can take risks, change careers, start businesses, or weather economic storms. You break the control system. Which one are you struggling with? Student loans, credit cards, or mortgage debt? Comment below and let's talk solutions.
Here's the final lesson from that currency history. The people who survived the economic manipulation were the ones who understood what was happening. The traders, the merchants, the educated elite, they saw it coming and protected themselves.
In modern America, financial literacy is your defense against currency manipulation, inflation, and debt traps. Yet our education system teaches calculus, but not compound interest. We learn Shakespeare, but not stock markets. This is intentional.
The hard truth: if you don't understand money, someone else will use that ignorance to profit from you. Banks profit from your ignorance about credit card interest. Investment firms profit from high fees you don't notice. Employers profit from you not knowing your market value. What smart people do, they educate themselves relentlessly. They read finance books, Rich Dad, Poor Dad, The Intelligent Investor, I Will Teach You to Be Rich. Follow financial educators, not get-rich-quick gurus, actual educators. Track their net worth monthly. Understand basic concepts, compound interest, inflation, tax brackets, asset allocation. Teach their kids about money early.
Real example. A 25-year-old who understands compound interest and invests $500 per month from age 25 to 65 will have over $1.2 million at retirement, assuming 8% annual returns. A person who waits until 35 to start? Only $560,000. That's a $640,000 difference just from understanding one concept earlier.
Action steps you can take today. Download a budgeting app, Mint, YNAB, Monarch Money. Calculate your net worth,
assets minus debts. Subscribe to one financial education channel, like this one. Read one personal finance book this month. Have a money conversation with your spouse or partner.
Step 32. 30 to 90-day impact. You'll know exactly where your money goes. You'll spot leaks, and you'll make better decisions. 1 to 5 year impact. You'll be in the top 20% of Americans financially literate. You'll build wealth while others stay stuck. Most people don't realize this, but financial education is the highest ROI investment you can make. It costs nothing but time, and it pays dividends forever.
3 actions to take this week. All right, let's get tactical. Based on everything we've covered, here are 3 specific moves you can make. Action number 1. Inflation-proof your emergency fund. Don't keep your emergency fund in a regular checking account earning nothing. Move it to high-yield savings account, 4 to 5% APY. Ally, Marcus, American Express. Treasury I-bonds, currently 5.27% APY. Adjusts with inflation, via treasurydirect.gov. Money market funds, through Vanguard or Fidelity. 3 to 6 months of expenses in liquid, inflation-protected accounts. Action number 2. Start a debt elimination plan. This week, literally this week. Write down every debt, amount, interest rate, minimum payment. Choose avalanche method, highest rate first, or snowball method, smallest balance first. Set up automatic payments so you never miss one. Find $100 in your budget to throw at debt. Cancel subscriptions, skip eating out twice. Even $100 extra per month saves you thousands in interest over time. Action number 3. Invest in financial education. Commit to 1 hour per week learning about money. Read The Simple Path to Wealth by J.L. Collins, perfect for beginners. Watch finance YouTube channels like this one. Listen to podcasts like Choose FI or Bigger Pockets Money. Take a free course on Coursera or Khan Academy about investing. Knowledge compounds, just like money does.
Let's quickly recap the key takeaways, because this is crucial. Currency manipulation destroyed economies in the past, and it's happening now with inflation. The US dollar's reserve status is powerful, but fragile. Diversify your assets. Debt is a modern control system. Break free from it strategically. Financial literacy is your best defense. Educate yourself relentlessly. Small actions today create massive results tomorrow. Here's the key takeaway. You can't control the Federal Reserve. You can't stop inflation. You can't change the monetary system. But you can control how you respond. You can protect your wealth, build assets, eliminate debt, and educate yourself. If this video opened your eyes to how currency and money really work, do me a huge favor. Hit that like button. It helps YouTube show this to more Americans who need to understand this stuff. And if you want more videos breaking down finance, money, investing, and economic history in a way that actually makes sense, hit subscribe and turn on notifications. We're building a community of people who refuse to stay financially ignorant. Now, here's my challenge for you. Comment PROTECT if you're going to take at least one action from this video this week. I want to see who's serious about protecting their wealth. Also, tell me where you're watching from in the US. Drop your state or city in the comments below. I'm curious where our community is located. Thanks for watching, and I'll see you in the next video, where we're exposing why credit scores are rigged against young Americans and the exact system to beat them. Peace.